What's going on, EGA tribe? Welcome back to the EGA channel where we plan to trade and trade the plan. That's right, we break down this market for you so you don't have to do it yourself. Very quickly, right before we start this video, if you could take a second out of your day and smash the like button, we would truly appreciate it as we continue to help you to break these markets down during times of uncertainty. It is during times like this when your likes mean the most to us as we continue to try to grow this channel and more tribesmen join our daily briefs. So we appreciate all the love, and if you want us to break down a specific ticker, all you have to do is note it down in the comment section and we will do it for you. So continuing on from last week and getting into the daily brief here, we had a pretty interesting close of the week with the Powells creating a market stir, as well as quad witching, pushing the entire stock market on SPY and the Dow Jones wildly down into key levels of support. We did mention there were two levels of support, the 418 level, which was the pink zone in the SPY chart, and the 412 to 414 level, which were both tested on Friday. On Monday, which is yesterday, we had a strong bounce in the stock market, and that rally down was bought up as quickly as it was sold off. So is this a dead cat bounce, or is this a rally into all-time highs? Let's break down the technicals and get through these markets. Right before I continue into technicals, I do want to mention that on the macro standpoint, from last week, we had retail sales down 1.3% month over month, as predicted by us. We've been predicting and tracking the economic projections in our playbook on the Discord. And we expect consumers to pull back on spending moderately without causing any market disruptions, of course. But we also expect overwhelming demand for goods and services continued for key consumer discretionary sectors. And also at the same time, the producers price index is up 0.8% month over month and about 6% year over year, as we have predicted this turbocharged restart of the economy. We can continue to see supply chain bottlenecks to continue causing imbalances in price volatility, and this in turn will continue to add to inflationary worries. This is what is causing so much of mayhem, and I have mentioned this before. So while the Fed continues to believe that recent inflation is going to be transitory, the surging upstream of prices for supply chains will ultimately increase consumer costs for goods and services. And this provides additional fuel to recently higher inflation, which will put further pressure on the Fed to accelerate its rate hike program. That is one of the reasons why the market didn't like the Fed's decision and the Fed's statements last week. Okay. So now let's jump into the technicals. Break it down without a frown and peel this onion. So let's have a look here. What happened in the S&P 500? Going through the S&P 500 first, we had two scenarios that we were looking at. I posted this on our premium members video yesterday. I'm sorry, but I didn't get time to do the video for you guys. I did one for the premium members of our Discord community, and if you want to be a part of our Discord community, make sure you click the link in the description. There is a beta membership that you can get started for just $38 a month and be a part of the tribe. We had two scenarios. The first scenario was a 3% correction, which is the one that we got. The second scenario was a 5% correction, which would have been down at the 404. So we did hit on the target on the nail there at the 416. In fact, we went a bit further down into the 414 very briefly before having a strong buyback up here and hitting back into the key pivot zone, which is the zone which we have been talking about that we have to hold. Now, this could be two scenarios right here. The first scenario is this is a corrective wave for another wave down. Okay, and that would maintain our 5% correction. The other scenario is if we continue to hold here for these next 1 to 2 days, then we may go bullish from here up into new all-time high territories. What is important to note is that on a daily chart, you can see that we actually just came and touched the trend line and then went back up. So that's important to note. But however, we do not know how this is going to pan out until and unless we track it daily. And so that's what we do for you. We track it daily for you. We tell you what are the developments that are happening. Now, on the moving averages perspective, if you look at the moving averages, we did come down to the 50 EMA and actually almost broke the 200 EMA on the 4-hour chart. And this was a very strong bounce on the 200 EMA. And then we kind of closed back above the 50 EMA yesterday. This is usually a very strong bounce signal. However, we need to hold this level today. 420 needs to hold in order for us to see continued upside. Okay, we do see continued strength in the S&P 500 and a possible bounce at this area to continue to the upside. However, we need to see us hold this level. Now, if we don't hold this level, then we will be seeing 416 and 414 again. And if we do break that level, then we're heading down for the full 5% correction at the 400s, which is going to be the 404 to the 408. That is your bearish scenario. The bullish scenario is we hold 420 and then we consolidate here for another 1 or 2 days. Remember, today we have Jay Powell giving his testimony again. This might cause again some volatility. And then we continue to hold higher above the 422, sending us higher into all-time high territory. This would pan out with the sector, the S&P 500 seasonal chart, where we have in June a slight dip followed by a early July to August rally. Early July, August usually is a rally month, seasonally by the S&P 500 over a 20-year range. Okay, so I'm not saying that it will happen like that. What I'm saying is it's possible for it to happen. Now, on the QQQs, we have a slightly different scenario. This thing held the drop like a brick, right? It didn't move much. We had a bounce on the 23.6, and then we continued in this uptrend, still a very strong uptrend on tech right now. We see continued expansion in strong balance sheet companies that are value driven. We have been talking about this for weeks now, and we also alerted our Discord members over and over again about this. The right companies to be putting your money in towards the end of the year are solid companies with strong balance sheets. Companies that are producing positive free cash flows, that are raising their dividends, that are producing enough goods and services to supply. And especially those companies that are a mixture of value and tech are the ones that will benefit in the second half of the year. So as the midsummer season starts to switch, we will see that the market will start to regain its appetite for the end of the year rally, but remember that we will get dips on the way. Now, I do expect us to move sideways in some form or some shape in the next coming few months. This is the reason for this is because we did project the S&P 500 to move sideways and then ultimately consolidate at a performance of about 8 to 10% this year. We have had 2 big years of almost double-digit growth, and so it makes sense that this year will be low double-digit growth to make up for the long average return on the S&P 500. So we'll see how that pans out, and we'll let you know how this market does by the end of the year. On the QQQ, this is still very bullish. The key pivot points to hold today will be the 38.2 level, 343, and then a break above 346 is going to be extremely bullish and to the upside into all-time highs once again. So not really much there. The key level for support and stop hunting will be at 338. This is the above the bullish pivot confirmation, and that will continue to be your levels to hold today. Great. Now, BABA also, I want to go through a couple of tickers. So BABA continues to consolidate and is almost about to break out of this pennant. So we'll have to see what happens with this. This is approaching a territory where it might break out or it might break down, and we'll see if Chinese tech can actually make a rally here along with QQQ and the rest of the stock market. I also alerted you guys on Instagram for a couple of plays that we were looking at yesterday. ROKU was one of them that hit right on the nail yesterday. So let's have a look at ROKU. ROKU was breaking out of a bullish wedge, and yesterday we almost hit our first target at 23.6. Today this might continue to run. If we can get a quick pullback, we may see continued upside on ROKU all the way up to the 400s in no time. These are the levels that we will be looking at. So make sure that you watch for the pullback, and then when you get the pullback, that's your signal to enter. We typically want to pull back all the way to the 360s before we enter. That would be about right. We don't want to enter on this and chase the wave here. We want to pull back to the 360s a retest of support, and then a continued move higher. That would be the ideal situation here. Yesterday, Aapl also had a monster move, almost 1.4%. That is a pretty monster move for Aapl. And we continue to see a nice bullish movement on Aapl here. And we already hit our first profit target. So we're looking for the second profit target at 136. So if you've been holding this trade with us, I mean, I have been bullish in Aapl for a while now. Yeah, so you could definitely hold this for a little bit longer. I have, you know, like longer term expiry contracts, so I'm not really tripping if this thing moves out of pocket. Next, ARK Fund. This one has been a clear mover too, has been pretty bullish. We have seen 2 consecutive waves now, embarking in its third wave, but has been finding some resistance at a 23.6. Maybe we might get a pullback before moving to the upside, but if not, the 38.2 and 61.8 are clear extensions here that are possible. So keep your eyes out for the ARK Fund as this moves higher, and if tech moves higher. Next up is JD. We saw lots of bullish buying on this name in the past couple of weeks. This one has been moving in a downward channel for a long time, and it recently broke out, consolidated above the demand zone and above the channel, which is usually a bullish signal. Now, we are looking for upside targets all the way into the $78 levels, which is right here in the supply zone. And we saw lots of unusual options activity for August betting on those strikes. So JD is a possible mover in the near future in the coming month. You definitely want to look at this trade and get in early on when you get the breakout out of this demand zone and a retest right here. So what you want to wait for is typically a breakout, a retest, a bounce, and then you can play this to the upside. I have already set alerts here at the let's see, $73 level roughly for a target at $78, and I already have shortlisted some options that I want to possibly take. Remember, plan the trade, trade the plan. That's all you got to do, right? Great. Netflix setting up for a nice bullish breakout as well. We see a pennant within the falling wedge. We'll see if we can continue to consolidate here, and if we can, this might be a bullish breakout out of this pennant and into the 23.6 Fibonacci extension. Remember that earnings season is coming to a close, and the new earnings season will come to a beginning. So that brings the possibility of new performances from new stocks, and we want to see how that goes in this next quarter. And the last ticker that I want to go through is Boeing, which had a very strong bounce just as we predicted on the bottom trend line at 236. And now moving to the upside, back again into these Fibonacci extensions. This time, we should see extensions up to this 264, 268, and 272 levels if we can get a nice wave to the upside. So keep your eyes peeled out for Boeing as we continue in this market to the upside. And that's all I have for you guys in today's breakdown. Let's conclude this market so that we can get this wrapped up. So in the stock market today and yesterday and along last week, we had a lot of important economic information come out. The Fed decided to keep interest rates the same. However, they signaled the intention for them to hold the rates until a shorter period of time. The market didn't really like that. They said that maybe inflation is going to run higher and they might be forced to do that even earlier. So expect that the Fed will try to calm markets by telling them and showing them that the proof is in the pudding, and that economic numbers that come out will continue to show that inflation is under control. The bond market has also been reacting unfavorably to this, and we continue to see lots of volatility all across the market. So make sure that you put your money into investments that are of sound balance sheets. The last thing you want to do right now is put your money into speculative growth companies. That is not where majority of the capital is going to flow. You want to keep your money in stocks that are producing, as I said, once again, positive free cash flows and have strong economic moats, have good competitive advantage, and also might be monopolies. Those are the ones that you want to really pick up in the second half of this year as we rally towards the end of the year and hopefully end this year with a green stock market. And with that, I'll leave you guys till tomorrow's daily brief. I hope you guys enjoyed this video. If you did, once again, smash the like button. I love you guys, and I'll see y'all tomorrow. Bye-bye.